Look how things line up and start working together when you're using multiple tools. Okay, we broke down on this pivot. We came back up. Now we're grinding and holding, and it's showing you kind of some proof it really would like to take it down. And look at our moving averages between the 5 and 13. We're nice and fatly separated. We're not really tight and nasty like we are here. So even though we're consolidating right here, we still got good separation in our moving averages. And what happens? The stock is respecting the 13 EMA on a 1 minute chart. Not a 10-minute chart, but a 1 minute chart. That's what I'm saying, guys. This 13 EMA works on all time frames. The 5 works on all time frames. You know? So you're crazy not utilizing this tool, because look at this. It's showing you it's holding, and you're grinding right here. And when they come close together, what happens? It breaks down. That is such a simple looking explanation right here of what's happening with this chart. And we're trading on a 1 minute chart here. This is not like I'm playing on a 10 right this moment. You got good separations with all these other moving averages. They're fanned out, like, you know, like you're spreading your hand. And what is your real risk right here if you decided to take a short right here? The 13 EMA could have been your stop loss. The high of these candles over here could have been your stop loss. Hey, you could have taken it to the 34. You see how the 34 is respected most of all day, almost the whole day. You can use that as your, oh shit, or even the 50 could have been your like worst case scenario, get out. Or you could have just took the next pivot. You see every pivot that comes in here, mid pivot or regular pivot, doesn't matter, is respected somewhat by the algorithms. So you know your worst case scenario, your stop loss should be that next pivot. It helps the risk management and helps you identify good entry points when you start utilizing multiple tools together. When you see a pattern that's starting to develop, and we'll be going over patterns soon. Look at the cycle indicator we started early on in the class talking about. What's happening here? It's breaking down. It's telling us that we are top cycle. We've got more than one trade idea sitting there in our face. And as AJ loves to tell everybody, did you take the trade? It's right there in your face. So these are things you need to kind of look at. That's a simple one. This gets a little more convoluted here because moving average is starting to cross. But look, cycle indicator is still looking good. We're still holding, technically. Not as clean, but we're still holding. And we're holding the pivot. It won't break above the pivot. So we have another entry point sitting there waiting for us, right in our face. You know, so we don't have to necessarily take these trades right when the initial breakdown happens. Way up here. We still get what I call micro entry points, because this is a 1 minute chart, to be able to take these spots and be able to take these things down. And you see, you could have taken a short, taken a little profit off the table. Oh, it's working a little bit more. I can average back in. Now it moves my average to buy here. Take it down, take a little more profit off the table. Oh, it's grinding down. Oh, looks like I may want to get out. So what? You didn't get the bottom. This would have probably affected most people because you see the bodies of the candles are closing above the 13. Now, if you look at the overall big picture of what's actually happening, let's look at the 10-minute chart. You see any entry points on the 10-minute chart there? Not really. My entry was way back here at the beginning on a 10-minute chart. But what did the 10-minute chart tell me in general? I am downtrending. I need to go with the direction of the flow of the river. It's going downhill. I don't want to counter trend trade this. I don't want to take a scalp position and take this thing long and pop it up and get hit in the face with a pivot or a moving average. I want to take this down. The 1 minute chart's looking good for a micro entry point. My 10-minute chart's telling me this thing's trending down. What's there to lose? Worst case scenario, I stop out at the next pivot. I stop out on the 13 EMA on the 10-minute chart. See how the 13 worked out? Hell, you could have gotten that position and held it all damn day. I know I make this stuff look simple, and it is hard. But when you start utilizing the proper tools in the proper way, it starts becoming like riding a bike. Once you figure it out, you'll never forget it.